Hedgeless Horseman here. It's April 5th, 2022, and this video will be a rant about peak stupidity. I just felt like doing it because I mean, every day nowadays you wake up, you see worse and worse headlines for the global economy. Added sanctions. Now I think Germany or the European Union is gonna ban coal imports from Russia. I mean, is that gonna help the energy picture and the inflation? Of course not. There's just, yeah, basically there's, for a gold bug, it's like every week you get so many pro gold headlines that you would, haven't seen for the last decade or so. I mean, it's like that famous quote: there are decades when, almost nothing happens, and then there's weeks where decades happen. And we're in that scenario right now. I mean, everything is accelerating. Everything is pretty much getting worse and worse. Rates are starting to rise. Inflation is obviously rampant. The economic barometers are pretty much, going south. So it's, I think, yeah, the yield curve inverted as well. So there's probably a recession on the horizon. So everything is turning to shit. I mean, this is basically what my case for the last years have been, that we will go back to the most basic economy, that sometime in the future you will need to actually send something real in order to get something real, and not just send IOUs in the form of paper, like the US has been doing, printing paper, sending out dollars, getting real stuff, commodities, and manufactured goods from China, etc. But now, as this Ukraine-Russia war has gone on, I mean, it's become more and more about actually having something real to send in exchange for something, another real asset. So this, I mean, commodities are making a huge comeback. I mean, this will be, I think, the decade for commodities, or decades actually. So everything is pretty much playing out according to, my thesis I had for being in commodities in the first place, and miners, of course. And the interesting thing is, like, when you look out there, okay, you see, stuff like this. For example, copper alert: the global copper industry needs to spend more than 100 billion to build mines to be able to close what would be an annual supply deficit of 4.7 million tons by 2030. I mean, 2030, it's not that far away. Eric Heimlich, head of base metal supply at Zero, said this week. And I saw some headlines from BHP where I think the nickel demand was expected to increase like 27 fold over, by 2030 or something along those lines. So it, assuming all else equal, at the trend we've been on, basically, in terms of, electrification, etc. I mean, these are ridiculously large sums and a lot of supply that needs to, get here if the world would be able to keep on doing what it's doing, the world economy and the global ESG trends, green trends, etc., etc. So it's like we're effed. I mean, the world is pretty much effed unless it changes course, obviously, because everything has been underinvested, like oil, gas, coal, all metals. I mean, it takes what, 10 to 20 years to build a mine, and you need this kind of money for mines, 100 billion by 2030. I mean, good luck doing that. So it's like, if there was ever a time where, future supply should be valuable, it would be now. And that's obviously juniors, explorers, etc., the ones that are proving up the stuff that needs to be made available if this global economy is supposed to be able to be on track. So it's just incredible. I mean, take the nickel futures for example. I mean, obviously, as the name suggests, futures. Okay, claims on future supply. I mean, this market totally broke down, and the big Chinese guy here who was the biggest short, he didn't have the nickel available to cover pretty much. So I mean, this market broke down, and that's now. I mean, again, if you think about okay, the BHP manager's headline about nickel supply will need to be increased, or nickel supply is increasing 27 fold, or that at least supply would need to go up 27 fold in a decade or two. I mean, and we're seeing this stuff now. So it's like obvious. Well, first of all, I mean, gold clearly in a bull trend. I mean, when I bet. I mean, every day we have these drawdowns or drawdowns. Small flash crash. I mean, this is beyond noise. Daily movements right now. I mean, the global economy or the current monetary system is beyond terminal. So it's like, who in their right mind would like, yeah, no, gold is down, let's say, 0.6%, better sell some future supply or whatever. I mean, it's unreal, but that's what's happening. I mean, the juniors are the future supply, and I don't think they've ever been cheaper. It's incredible. I mean, here you have a long-term short of Newmont, pretty much broke out past all-time high set in 1987. Obviously, Newmont is the largest gold miner, and that's current supply and proven ounces in the ground, etc. So that's revaluing along the lines which one would expect, because we're mining more gold than we're putting in production and discovering. So ergo, the price of gold has pressure to the upside, because it's getting more and more, new supply is getting scarcer. Let's see, it's getting harder and harder to meet future demand, and at the same time, a mining company obviously eats up its own future. So I mean, the mines that Newmont has today, all of them will need to be replaced one day just to uh, uh, keep steady state up, let alone grow. So it's like future supplies, obviously, it's gonna have a price pressure to the upside, because the first of all, the supply demand for gold is has been encouraging for quite a long time, and at the same time, the reasons to own gold, given the headlines we're seeing out there, and the shift to our more real economy, let's say, is giving more reasons to own gold, more people to own gold than the ones that already own it to own more gold. So the demand I would expect is gonna keep increasing, because we're not even near the average levels of gold ownership we used to have. So we're going into a time where gold is gonna, the merits to own gold is gonna go, it's going up in importance every passing day. So that's gonna obviously increase demand, and at the same time, you can't get supply, you can't stop this declining supply picture without, well, first of all, raising gold price, and secondly, to explore and find new stuff, new mines, new discoveries to put into production. So it's just a perfect storm, and it's just mind blowing that juniors which are the future supply. I mean, in an ideal world, let's say we have I don't know, let's say a 6-year bull market left, or whatever, like a 4-year bull market left. I don't know where that would be, but let's say a 4-year bull market to the peak, whatever. Let's say, well, let's do it like this instead. Let's say like the last buy signal on the monthly. Let's say we have a peak in gold around here. Yeah, okay. Let's say gold goes to at least 3,700. obviously it's like when you're a Newmont or any mature miner, you're decreasing your gold supply, which would be sold at higher prices in the future. So my main focus is to have the being the juniors, the explorers that grow their gold supply, gold on the books, uh, as the price of gold also goes higher. So I mean, in an ideal world, you would want a junior that could grow for as long as the gold bull market keeps on going, and not actually, let's say, selling a lot of gold in the meantime, because that draws down the reserves, obviously. So you'd want a junior that might have, let's say when it starts off with, a discovery hole or two, and in 4 years you have gold at 3,700, and in the meantime, the junior would have proven up 1, 2, 3, 4 million ounces, whatever. So it's imagine if a junior is worth, I don't know, 20, $30 million today. Imagine what it would be worth if it has 4 million ounces on the books with gold at 3,700. Obviously, it's like 10, 20, 30, 40 bagger potential. That's my ideal. That's why I like hodl cases. Why I like growth. Why I stick to growth companies, because I want to have the ones that when the value of gold increases, I want the ones that increases their holdings of gold in the ground. I mean, that's just leverage on a favorable theme. So I mean, I'm when I see the valuations out there in the juniors right now, after reading the headlines, and everything gets more and more pointed towards gold. I mean, it's incredible. I really understand why, in capitalism, at the end of the day, there's going to be a few people who end up with all the money, basically, like in the game of Monopoly. Because the ones who are doing the right decisions will just keep on fleecing the 95% of people who does not make as good decisions. I mean, that's just by default. And when you see junior valuations like this at a time like this, it's just beyond incredible. It's like I almost get pissed off because it's so offensive, the stupidity. And it's like I feel like I'm spite buying juniors lately. That's like, okay, nobody else wants to buy this. Nobody else has any interest in revaluing these juniors higher. Well, okay, I'll buy more then. And if they stay down, I'll buy even more. Because I expect the longer this occurs, the dislocation between future supply, aka juniors, and the future price of commodities, etc. And first of all, the current price. I mean, juniors aren't even close to valuing in the current price of gold and a bunch of metals. So it's like, yeah, okay, someone is handing over, 3, 4, 500% returns by allowing me to buy juniors this low. Obviously, on average, not every junior is going to pan out, and some I expect will go up 10 to 20 fold. Some might go down, some might go bankrupt, some might go up 5-fold or whatever. But on average, it's like on a day like this, for example, where when people are actually selling juniors because gold is down 0.3% or whatever, it's like, if I can just keep on having dry powder, if this lasts for another year, let's say, I would have substantially increased my holding in juniors. And the final payday, the final harvest is just going to be that much larger. Just like, this is actually investing in this sector is a bit boring because when you think about it, it's so incredibly easy. It's just that it's incredibly frustrating, and the stupidity is offensive almost. It's like you're able to steal future money at huge discounts, and it just keeps on going. On that note, it's just fun. It's like Nevada King put out their financing today. It's like no warrants, no underwriter fees, no discount to market. Like, what does that tell you? They don't even need to entice the big money, and Colin Kettel is participating as well, lead order, which is an insider CEO and has a lot of shares already. So he as an insider is doubling down and not even giving himself any warrants, etc. And obviously he's not the only one participating. So I mean, the big money institutions, insiders in some of these high quality juniors, they don't even need to be offered a warrant to participate. Why is that? Because the case is the case is so good, obviously. And that goes, I think that's a sign for the whole junior sector. You see financing, you see private placements, you see upsized private placements. So institutions, smart money, insiders, etc., who know what they have, the value of what they have, who can see the future, quote, they are having no problems finding reasons to buy. Why? Because there's no retail in the market. Retail is completely out of this sector. I mean, the dumbest money is not even close to being in this sector in a meaningful way. There are a bunch of microcaps which were valued like 200-300% higher, let's say at least 200% higher, during the sentiment peak of 2016-17, and gold was at 1350 back then. They're lower today, let's say at least 50% down on many occasions. Many juniors are selling for 50% less with gold here than when gold was here. You can't explain that in any way, especially given the high headlines and the record demand for gold coins in the US, and Russia pricing gold in rubles, etc. And just across the board, central banks buying up, increasingly buying more gold. So it's just beyond mind blowing. I mean, again, it's offensively stupid. So it's like when you think that the markets are hard, etc. No, this is blatantly obvious. You only need to have a firm grasp of the obvious, staying power, and patience, and you could kill these markets, because there is no way in hell these valuations makes any sense. Not now, not in the future scenarios. And that's why I'm a bit bored with this, junior sector. I mean, the markets is supposed to be, I mean, it's you investing against everyone else. It's like, the ultimate competition, let's say. Because you're at war constantly with the marginal buyer and seller, and which is potentially anyone. But it's just mind-blowing how at the same time easy it is. It's like a walkover. You're investing against a moron. And the frustrating thing is that a moron can be a moron far longer than you can have patience. But that's just how sentiment works and the masses work, etc. I mean, for Christ's sake, there's markets are close to all-time high still, broader markets, and cryptos, sure, they're down some are dead, some are down like 50-60% or whatever. But there's plenty of cryptos still that are, getting bids. So it's not like the masses haven't even woken up to what's happening to them. They have no idea what's about to happen. They have no idea that the US empire is falling. They have no idea that, the Western world can't sustain higher rates. And that if they don't raise rate, the inflation will, devastate everything anyway. And if they raise rates, they'll take down the economy as well, and the whole thing blows up. So it's like this system, this old system which we've been in, this fiat-backed system where demand is continuously being pulled forward by increasing debt and printing money. I mean, that's terminal. That's beyond terminal. So it's like there's no debate if of the case of gold, and that's why I recently said in a interview with K Reports, like I don't need to do any more research on gold or silver or the monetary system, etc. It's so beyond terminal that it's like this is not a question. This is just when is it, when is the final day of it, let's say, and we go into the aftermath. And we're obviously near the end game right now because everything is happening. There are more changes happening in a week than the past 40 years, for example. So this is not even up for debate to me. And of course, again, given that, okay, you have the majors like Newmont, okay, all-time high pretty much. Well, a bit off, half 1% or so off from the all-time highs or whatever. But it's like, yes, future production, known supply has revalued, like in the case of Newmont. But again, juniors have not. So where do I think the case is? I mean, I'm super bullish on gold, silver, and all metals pretty much. Would I be in Newmont? Sure, you can be in Newmont. I mean, it's a good company, it's a large company, and it's been doing well. But that's not where the big dislocation is. I mean, first of all, gold, in my opinion, should be a lot higher already, but it's going to go a lot higher. But the ones that haven't revalued are obviously the juniors. And you see, shorts like this. I mean, they're okay, this might be a bad example, but it's like, yeah, okay, it's up a bit, but we're not even past 52 weeks high. I mean, it's a lot of them are barely off 52 weeks low, especially the micro caps, and that's also a point I would like to make, that okay, which have already revalued based on the, let's say, some people's awakening to the merits of gold. That's the larger producers, the one that when people Google gold miner, they get Newmont, etc. They get Barrick. So the ones that are perceived least risky, and where the first time gold buyers, etc., or first time gold mining buyers can find, that's the ones that have revalued. And then it drips down basically. That, I mean, when we go from a sentiment low where everyone is fearful, as some optimism is starting to shine through, that's going to go first. I mean, the first ones people tend to dare to enter are the ones that they feel are the safest of the bunch, and that's the larger miners. And then that drips down to mid-tier producers, and then maybe smaller producers and developers, etc. It's the micro-cap exploration stocks, the penny dreadfuls as they call. They are perceived to be the most risky, and they will be the last to move. But when we go from pessimism, where the okay, this isn't a junior explorer, but I think it's a high octane beta play. Bear Creek Mining, you a huge silver deposit that's so far not been put in production but been around for a long time. I mean, they get absolutely killed when we reach peak fear, and when we reach what the hell? Oh, indicators. That's not right. So they get absolutely slaughtered. Way more, slaughtered than the majors. But then at the highs, they tend to outperform. Let's see what Newmont did here from the bottom. It did 178%, great. Bear Creek did 645%. And that goes for, same thing here. Flash crash up like 7-8% in Newmont. Bear Creek 450%. And as you can see here as well, at this point, this was the flash crash. This was the top here. I mean, Newmont was way past its previous top. When Newmont made another, broke out of, past this top as well, I mean, way higher than here. Uh, Bear Creek was down here. So Bear Creek went like that when Newmont went like that. And then you have another correction, and then a blow off, and it actually passes this peak at least. And this was actually just marginally above this one. And then it gets killed again. Point is that same thing here basically. I mean, Newmont started to consolidate, went up a bit more, but it's like, okay, for Bear Creek, that from the bottom here, that was still 90%, and for Newmont that was like 50%, so almost double, in the blow-off phase late in the innings. So what I'm trying to say is that the juniors are absolutely dislocated from the price of gold and from the majors and the probably most mid tiers as well. And they're at the same time again the future supply, especially the growth store, etc. But same could be said for Bear Creek Mining, but it's not a tier 1 deposit or anything close to that. Point is, there are risk rewards within risk rewards. Like gold, yes, no brainer risk reward. I mean, this system is terminal, so that's a no brainer. Silver is historically very cheap, so pretty much that's a no brainer as well, because when this really gets to a head, I think silver will be absolutely a monster basically. But it's a harder business because silver has it's not even past its 1980 high. But that's why I also think that's gonna revalue more than gold. Anyway, but it's the future the current price of future supply, which is the juniors, which is more needed than ever, pretty much. All metals, you need to have a bunch of new deposits, because the ones that are in operation, that belongs to the major producers, they're depleting every day. They're depleting their reserves. So it's the future supply that has a great future. And like we can see what happens in nickel when just immediate future supply is hard to find. And that's selling at cheapest prices ever. It makes absolutely no sense at all. Never been a better future for the metals demand supply picture. So future supply ought to be, from a logical sense, that should be like, everyone should be scrambling basically to make sure they get a hold of future supply, because it will be needed, sometimes multiples of the supply that's already being mined and depleted today. So it's just incredible. I mean, I think the longer this keeps up, the longer I can just basically steal future supply in, gold, silver, nickel, zinc, tin, etc. I mean, that's going to be so valuable one day. And sure, it might come a time I mean, we will probably enter a global recession, etc. And you'll have these, these demand pictures are obviously based on steady as she goes numbers, that the trend we've had will keep on going. I mean, we'll probably have big hiccups on that department. It's like I mean, take the crash. Okay, now it doesn't even go back to that. But these base metals, they have these wild swings, etc. But the thing is obviously that, okay, you have these oscillations around whatever supply demand picture, but that's just getting increasingly tighter. So it's like, when talk about this time is different, typically that tends to be different environments, etc. But the only thing you can't print physical supply. So you can have, you can claim that our given rate number, let's say, this is the new normal, we'll have zero rates forever, yada, yada, yada. I mean, theoretically, you could do that a long time, because it's just, made up in a sense anyway. But you can't start a mine tomorrow. So that's the lowest denominator, the most base, the building blocks of everything commerce basically, which are commodities. So they will start to, the tail will wag the dog, or however you say it. So it's like, in my opinion, buy anything, be in anything that cannot be printed, because that's gonna, I mean, if we have a roaring economy, metals will do great, because these numbers would be, get even higher. We need, who knows, 300 billion or whatever, and then we'd need 50-fold increase in nickel. But if shit, starts to tank, and we have a global recession, and the demand for infrastructure, whatever, goes down, and people, in an inflationary environment, can't afford to buy diamond necklaces for their dogs, or buy the newest iPhone, etc. Of course, base metals, etc., as well as precious metals that are used in industrial applications will decrease. But at the same time, if that happens, this whole fiat system is going to blow anyway, and then gold is going to revalue. And when fiat dies, you'll still need, the let's say energy, etc., because everybody might not be, wanting to buy or can't buy a diamond necklace for the dog, but they need to heat their homes and eat food, etc. And when you a company that sells wheat, for example, maybe they need copper, so copper will be something they'll be happy to get in return, but they won't take dollars or euros, for example. So it's like, even though I think the risk reward is best for gold overall, I mean, you can't deny that if we're gonna have anything close to the kind of civilization we're having today, we're gonna need a lot more of everything, basically. And you can fix that obviously by revaluing the metals, and more marginal deposits can be economic, and you cut down timeline to get a mine into production. But we're far away from that. I mean, we're still shutting down nuclear reactors because of ESG reasons, and quote, climate change, etc. So we're beyond EFT. I mean, we're beyond EFT. Real assets is the only place, by far the best risk reward scenario. And it's like, when I think about how I look at Bitcoin, for example, I mean, the Bitcoin bulls, they're like, yeah, we're gonna see $100,000 in Bitcoin one day, kind of like the carrot, etc. It's like, okay, yeah, that's a double. I mean, most of these juniors could go up, 200-300% if just some sentiment returns and they get even close to fair value. So what's the risk reward? And if you were talking, true blue sky case, let's say, for the Bitcoin bulls, it's like, yeah, it's going to be the new world reserve currency. I mean, let's say it goes up tenfold. Okay, in that case, the world's going to still look totally different, and these juniors will probably gone up 20-fold. And it's, at the end of the day, we know gold's been around for 5,000 years. Bitcoin's been around for what, 14 years or whatever. So it's like, to me, it makes I cannot understand how anyone who is aware of gold, silver, and the mining sector would have a large percentage of their assets, their money, in Bitcoin. I simply can't believe it, because the risk reward, in my opinion, beyond pales in comparison to buying future supply of what is actually 100% needed. Just my opinion. I own no crypto. I'm full bore into future supply, aka juniors. But at the same time, be diversified, and don't, you probably shouldn't have as much as I have. I'm probably overly greedy. But like, first of all, the most important thing is obviously physical gold and silver, because that's already stuff that has been dug up, because we have no idea what's going to happen with energy prices, nationalization, yada yada yada. But when I just think about it, it's like, okay, I want to have a solid floor with gold and silver, physical, and then everything is going to be in the best risk reward opportunity, which are junior explorers, future supply. That's just how it is. No brainer, cheapest subsector, cheapest subsector there is today, and especially in light of what I think is going to happen with the underlying commodity themes. and then you have like, okay, you can add on a few things like, okay, jurisdiction, yeah, probably, I mean, you would want one that is not that keen to nationalize, but of course everything comes with a price. It's like, you know, I own Eloro and Montero, for example, which are in Bolivia, and I own some Peruvian place, I own some African, but they're just, you know, so cheap that I think I get paid for it. That okay, yeah, there's a chance of anything happening, but if it doesn't happen, I'm just gonna get paid more, so I get rewarded for, let's say, the added risk I'm taking. But it's like Goliath. Would be an underground operation, which would be good for ESG reasons. High grade, which would be less tonnage, less fuel supply, less energy needed in a time where the energy sector is also facing shortages. Okay, that's great from a marginal margins per ounce perspective. Um, and I forgot the other points. Yeah, but I don't have the exact answer because we don't know what's going to happen to any particular country or industry, etc. But I don't see, you know, Canada nationalizing its entire mining sector. Same for Western Australia. I mean, they're so big. I don't think you can really turn everything over to the state. But if you have a smallish or a country that has one mine or whatever, it's like, yeah, okay, that could possibly happen. Yeah, but and domestic energy supply would be great, obviously. You know, if you're 100% importing your energy, or you know, close to 100%, and that energy gets cut off for some reason, maybe another country can pay more. That's obviously not going to be great for your fuel costs. So if you have a very low grade open pit deposit and you don't have domestic energy supply, that's probably not going to be great. So from that sense, I think Canada is great as well, because you have a lot of, you know, supply that could be brought onto the market. I mean, they have a bunch of shale, and that goes for the US, I guess, as well. So I think that's just some things to think about, and obviously. I think that if there was ever a time that you should be diversified, it's now, because the average expected returns are so high that I don't think you need to be overly concentrated. Because again, my nightmare is to be 100% right, which is playing out right now in terms of the overall theme, and ending up 100% not wrong, but you know, the result comes out 100% unfavorable because you were in one company, let's say, and you were even 100% right on that company, or 100% right. Let's say the case played out along your blue sky scenario, and that gets taken away or whatever. So you end up with no, let's say you think it's the biggest gold deposit ever, and someone takes it away, and you end up owning, you know, you only own that one. So you end up with zero gold, and gold hits $3,700 in 4 years. That's obviously a nightmare scenario. So I think, again, it's like diversify, because I think when this really gets going, when the juniors really gets going, and what's in store in the future, if you just hold on to 30, 40 good to or decent to high quality juniors, I think some will be up tenfold, 20-fold, and that's gonna, you know, a few will pay for all the losers, and then some. But it's again staying power, and it's like, in my opinion, a joke to like, oh, gold is down 0.58%. I better sell. You know, okay, you're gonna sell something that is generationally cheap because a brain dead market went down, and someone else was brain dead enough to sell. It's like, I have no idea who's selling, who could come up with a case to sell juniors, you know, on average. Sure, everyone has a reason to perhaps sell an individual stock or rebalancing, but overall, it's like, this is so beyond noise, it's not even funny. It's gonna get worse. Case for gold has never been better, at least since I started. I absolutely love juniors right now. I love them way more than in the 2015 bottom. Consider me biased. Assume I own all companies I ever mention. Assume I'm sponsored by all companies I ever mention. So it's like, if it doesn't make sense to you, that's okay. Make up your own minds. You know, know what you're doing pretty much, because you can't trade someone else's conviction, and there's nobody that can be there holding your hand all the time. It's got to make sense to you. Otherwise, if you don't know why you're buying or selling, you won't know when you should do the opposite of that, etc. Do your own due diligence. Thanks for listening.